a central Ethiopian region that's seen almost 2 years of sporadic anti-government protests, is planning a new private oil company and is in talks to import Middle Eastern crude, part of an economic initiative authorities say will address some of the roots of the unrest. Oromia Petroleum Share Company, the planned venture, will import the oil via Djibouti, process it at a new large-scale refinery and distribute it to gas stations owned and operated by local youths, Tekele Uma, head of the region's transport authority, said in an interview. Potentially creating more than 50,000 jobs, it will build a transportation network initially benefiting farmers and manufacturers in the Oromia region who send their products to the capital, Addis Ababa, and other cities, he said. The company would compete with National Oil Ethiopia Plc, or NOC, whose shareholders include Saudi Arabian billionaire Mohammed al-Amoudi. NOC is one of Ethiopia's biggest fuel suppliers, according to a feasibility study shared by Tekele. Oromia Petroleum targets a 21% share of Ethiopia's fuel market within 5 years of operations. Ethiopia is ranked Africa's fastest-growing economy by the International Monetary Fund, but unrest has threatened to derail the boom. The protests that began in Oromia in 2015 over alleged land grabs and political neglect later spread to the Amhara region, with security forces accused of killing at least 600 demonstrators, according to the Association for Human Rights in Ethiopia. The government had acknowledged there were casualties and said they included security personnel. Foreign investment slumped after protesters targeted businesses, including those owned by Nigerian billionaire Aliko Dangote. The Oromo People's Democratic Organization, one of 4 parties that make up Ethiopia's ruling coalition, describes the fuel project as part of an economic revolution that seeks to quell the discontent. Further plans will be announced in the coming weeks and months, Tekele said. He declined to name the companies in talks to supply the oil. Oromia Petroleum seeks to capture 7% of Ethiopia's commercial fuel market in its first year, according to the feasibility study produced in May. 4 companies currently control 90% of Ethiopia's fuel market, while demand is growing at an average 7% a year, it said. The planned refinery, in Oromia's Dukum town, would be linked to Djibouti by a recently completed $4.2 billion Chinese-built railway that runs to Addis Ababa. In its first 2 years, Oromia Petroleum will aim to build 80 gas stations in Oromia, the Southern Nations, Nationalities and Peoples region, and Diadora, facilities that will employ 2,500 people in total, according to the study. Besides distributing fuel, the company plans to operate related businesses such as cafes, spare part shops and mechanical workshops, it said. Within 5 years, Oromia Petroleum plans to expand to 165 stations across the nation, according to the study. Ethiopia's annual fuel consumption was about 3.5 billion litres, 925 million gallons, last year, according to the feasibility study. 13 oil companies currently supply about 740 fuel stations in the country, with Oromia having 220, the largest concentration in all Ethiopia's regions. The companies include Totalsa, OILWIRE and NOC. Oromia Petroleum is a subsidiary of ODA Integrated Transport Share Company and will have initial capital of $1.7 billion, $73 million, said Tekele, who also heads the new company's board of directors. ODA's capital comes from share purchases by public enterprises affiliated with Oromia State and investors including Oromia International Bank, Awash International Bank and insurance companies, as well as farmers and youth, according to Tekele. All the state's 634 municipalities contributed, he said, and every individual, enterprise, farmer and civil servant will take shares and have ownership.